scenario first. Now the commercial vehicle and the microfinance segment of the bank has has seen a significant impact in Q1. In terms of the bull case scenario, we have analysts estimating that the microfinance stress has already peaked out in Q1 and is not estimated to grow any further. Second, what we have is the growth. Now the growth has been below guidance for the Q1 FY26 as well. Now the growth has been consistently below the guidance for the bank. In terms of bull case scenario, the bank expects no significant margin decline from here. Now they expect a slight decline in margins. However, they do not expect any significant decline in margins from Q2 FY26 as well. Thirdly, what we have is ROA. Now the Q1 ROA have been lowest in the 11 quarters for the bank. Now in fact, this has been the lowest in 11 quarters. However, there has been an improvement in the credit cost, which may aid ROA from Q2 FY26 as well. Next, what we have is the customer acquisition. Now, the bank is focusing on customer acquisition funnel. Now, the focus have shifted from the profitability to focus more on new customer acquisitions as well. In terms of the bear case scenario, we have the elevated operational cost which can come in terms of the new acquisitions for the customers as well. So this is what we can expect. Lastly, what we have is the price to book. Now the bank is trading at a 2.1x price to book, which is not very premium valuations. However, in terms of the bear case scenario, it's not a consensus buy by analysts, because in fact, despite trading at a 2.1, we have 4 analysts suggesting a sell on this stock. And if we look at the analyst recommendation, we have consensus upside of about 15%, but 4 analysts suggesting a sell for this particular stock as well. So this is what the overall picture is panning out for a Kotak Mahindra Bank.
That's interesting. Thank you, Vansh, for that. In fact, Chakri, coming to you, I mean, clearly there has been underperformance with regards to banking names. We were just talking about the kind of consensus re-rating that has happened on the downside from an earnings perspective for bank majors, the least being for the large cap banks. At current valuations, would you be a buyer of banking majors? And if so, which would your top picks be?
Banking at this point in the cycle should actually start doing well. Again, for the same good old reasons of, again, we have a continuation of the interest rate cut cycle. While people talk about NIM hits and all that, those are less relevant. What's important is, in our opinion, is the volume growth that the business will see. And valuations are pretty much on their side with the State Bank of India or an ICICI. And, with further rate cuts that impending in India, at least 50 basis points, and, this huge amount of push by the government in the last few weeks, GST, etc., volumes will pick up. And therefore, I think there's a good amount of upside. State Bank trades about 1 time. Kotak, like you just mentioned, 2 times. HDFC Bank also about 1.5 times.
Kush, in the